Hello, today is Monday, the 14th of July, 2008. This is Brian Shannon from AlphaTrends.net, and the market has just closed and nothing changed. We had a further continuation of the downtrend that we're in, and a lot of people are getting beat up pretty badly in this market as the sellers just won't seemingly go away. We've clearly undertaken the lows from earlier in this year, and that level seems to have acted as some resistance here over the last three sessions as well, near that 126.20 low or so that we had seen twice actually, once in mid-January, another in mid-March. So the downtrend is clearly still intact. The market again keeps getting stretched to the downside, and when your biggest reason for buying is that it seems like it's down too much, you're basing your decisions on hope, and this market just fundamentally, I guess, doesn't have much reason for hope as well, as the all the trends continue to be remaining intact, and don't be concerned with picking the bottom, because the bottom is a process, not an event. There's no reason to get involved here when there's such uncertainty in the overall market. And the S&P 500 again, found resistance up near that 126.20 or so, just below it, actually at about 126 today. But clearly, we've got a declining 5-day moving average. We've got this downtrend line still intact, and we've got lower highs and lower lows. 126 is our first level of potential resistance. I think I had mentioned that maybe 125.60 I was looking at. Is potential resistance, but there's just going to be resistance found all along. It's likely, the further down we go, it becomes greater that we're going to see some kind of short squeeze rally. But in order to position for that, you've got to be a very skilled trader and looking at shorter term time frames. And even on the shorter term time frames, there's really not much reason for hope that we're going to get. There's always reason to hope, but there's no technical evidence, and that's what you need before you can make a purchase, is actual technical evidence that the buyers are back in control, and we have none of that. Market opened on a gap higher again today, right up near that declining 5-day moving average, and once again, sellers came in and met those enthusiastic buyers who figured that the government was going to save things over the weekend. They met the opening prices with new short sales and further supply from their long holdings. Right now, 122.50 has been tested here the last couple days numerous times, and looks like it will probably be taken out. Again, a trend once established, more likely to continue than it is to reverse, and picking bottoms and tops is the most expensive job there is on Wall Street. If the market can somehow get back above that 126.20, then maybe we'll get a rally up towards the declining 20-day moving average. But again, only the most skilled and aggressive traders should be involved in the market trying to attempt any such movement. Today, we remain below this declining VWAP for the day pretty much all day long. And again, nothing's really changed. The financials down almost another 5% in here today. Just a disaster, this group. Stay away. There will be a bounce at some point, but anyone who's told you that they've found that bounce is clearly a liar, because it's closed at another new low, and not a single purchaser is in a profitable position in these financials. They're just a mess. Stay away. It's just bad news. No different than trying to pick the top in oil. The USO was down a penny today, but clearly still in a strong, powerful, just picture perfect uptrend. There's, the market holds on to this strength. We had seen last Thursday that this market broke past some little resistance short term at the 112 level, and then we had that gap higher on Friday, but the market holds the gains in here as well. There's no reason to be looking for a top. There's no technical evidence of it. Maybe under this level and breaking below that 50-day moving average will provide a little bit of short-term relief and pullback, but there's just no evidence still of any type of top in there. And gold, I had pointed that out, I think, last Thursday. That gold looks like the buyers are back in control here again, and how high gold can go is anyone's guess. But on the GLD, I would expect at least a test of this 100 level. No reason to think it wouldn't. Still in a very strong uptrend here. We've got that 10-week moving average pulling up through the 20-week moving average. The 30 and 40-week moving average are holding as well, and we've got an advancing 40-week or 200-day moving average that has held as support after this recent consolidation. I don't think you want to chase it here on Thursday Thursday, I'd mentioned that RGLD had looked good, and this stock has just taken off really nice to the upside. Look at that type of stock maybe on a pullback towards the 34 level, but gold is clearly one of the things that's working on the upside. The Russell 2000 is another one that's continues to be in trouble and look like it's headed for at least these lows right here. This market again holds above the January and March lows, but it seems to be consolidating in this tightening range, and the noose is probably tightening around the buyers in here as we see that we've got these lower highs again, a little bit of support down here recently near about 65 and 65.70 or so. I think breaking below that, we clearly would probably take this 65 level out and then look for a test of this level, and I would say more than likely a failure. The only thing that will really change that, in my opinion, and make me a little bit more excited, not even excited about the long side, but a little more cautious about thinking that the correct exposure is the short side, would be a move back above that 68.20 level. But when in doubt, stay out. If you're having a hard time believing what you see, then just the sidelines and safety of cash is something that's best for most people, and that's something that I've repeated several times over the last several months here. The Nasdaq 100, this one is also much stronger relatively than the S&P 500 or the obviously the financials, but the Nasdaq 100 closed right near, well, close to its lows today, but lows for this move here on a closing basis as well. We've got a declining 10, 20, 50, and 200-day moving average. The trend is clearly lower. No reason to be thinking that the market's going to turn around in here. The level that might lead to a little bit of a short squeeze rally again would be right up here at about this 46.10 level or so, 46 to 46.10, and you have to be very suspicious of any rally attempts here, because when we have all these moving averages declining like that, it means that there's bigger players liquidating their holdings, and they don't do it overnight, and any rally attempts are where they're typically going to come back into this market and release more supply. So let's take a look at the 30-minute time frame again. This 30-minute time frame is just real choppy, but clearly still lower highs and lower lows in here. I think taking out this 43.90 level or so, then maybe the next shoe drops and we continue down towards the lows for the year in here at near the $41 level. We've got a lot of earnings reports this week. I'd mentioned some of those on the blog this weekend, so go ahead and take a look at those. I posted the charts for them, and just continue to play a very strong defense. We're in a very dangerous market.